Hey guys, we're here with the Reinmuth Team podcast, and today we're with Holly and Brian from Bingo Reverse Mortgage. Everybody wants to know how reverse mortgages work. They're always talking about it, and quite frankly, we don't even really know. We kind of know, so we bring in the experts, and here they are. Tell us a little bit about yourselves. Tell us, what's your background? How in the world would you I guarantee you didn't say, when I grow up, I'll do reverse mortgages. So
I grew up watching Tom Selleck.
Exactly.
I did.
We all did,
Yeah. Well, we're both native here to Colorado, and I'll Holly speak to her story a little bit. But native here, grew up north, went to Cherry Creek High School, and went right in the Marine Corps right after that. I heard one of your previous guests was a helicopter crew chief. Ironically, I was as well on a CH-53 Super Stallion. Loved it. Was a great gig. Joined for the right reasons. Wanted to serve my country. It was in my family's history, and anyway, it was my honor to be a piece of that. Got out and had done some work with a recruiter a little bit, and noticed a couple of things. I was able to make a connection with people, and wanted to stay on the good side of things a little bit. So did different types of sales work. We ended up meeting. We've built a couple of different smaller companies, doing everything from lead generation for law firms to a little bit of travel and whatnot. And we ended up looking with everything kind of shifting. Some doors closed for us, some other doors opened. Her father, and I'll let you speak more to this, but she grew up around the kitchen table around mortgages and real estate, right? So he had gotten into this on this side. I said, reverse mortgage. What is this? And you ever come across sometimes those guys, they want to do like MLMs all the time?
Yep.
You know what I'm talking about?
Yep.
They get this next one, this tea that's going to grow your hair or whatever, stuff like that.
Yeah.
So anyway, he's always had a heart for entrepreneurship, and he's done different things, built very successful as a realtor, successful on the forward mortgage side. And he stepped into this piece, this reverse mortgage piece. And the more I learned about it, I was so virgin to the industry. I have no blinders, no assumptions, no paradigms to bust through. And I looked at it and said, why isn't everybody doing this? And I'm not the most financially gifted person, but by the time I started diving into the numbers and how many baby boomers are turning 62, it's staggering. You start to look at the real estate market out here, and it really became a no-brainer. Marketing and sales is really my background. Holly's she's the glue that holds everything together.
So tell us, Holly.
And,
who are you?
I don't even know how to introduce her. Yeah.
Well, I got a degree in journalism and advertising,
Okay.
and so that's where I got my start, is marketing and advertising for nonprofits. So Brian and I both have a heart for nonprofits and giving back to the community. And but like Brian said, I grew up. My dad's been in the mortgage and real estate business for over 30 years now. And so he's been a huge mentor of ours. Now he's a pilot, and I'm so proud of him. He totally followed his dream and his passion.
That's
and
cool.
at 62 became a pilot and is doing that, which is amazing.
That's
but
cool.
He's there for any questions that we have. And we just, again, the more we learned about it, with both of our skills, we're very different. And so we complement each other in that way. And so that just really worked well for us, and having him introduce us to what is a reverse mortgage and how does it work. And we're like, this is what we want to do. We want to specialize in it and help. And we have, in the stories that I could share and the testimonials we've gotten, it's just so amazing, the people that are just so thankful for this product, and it's really, really helped them. And
It's
that's
really rewarding.
Yeah, and that's really what we want. We want to help people. That's the core of what we want to do, and this is a really great tool.
Tell me exactly what a reverse mortgage is.
I believe it's an old wooden ship used in the Civil War area. No, it is a myth, and a lot of people don't know how it works. There's kind of two different products that run parallel. They're sister products. There's a traditional reverse mortgage product where people think about pulling the equity out of their home, turning off their mortgage payment, and staying in their home, especially if they're going to be there for an extended period of time. There's another product out there that is very little known, many people aren't aware of, a lot of agents aren't aware of, is a reverse for purchase. And a reverse for purchase is very similar, but it opens up some different doors for people that are looking to move into a home without a mortgage payment.
Okay. Wow, that's opened up my curiosity now. I want to know what a reverse for purchase is.
Yes.
That's very interesting. I'm trying to guess here.
Yes.
You have to purchase a house, or are you already in a house, or how does that work?
So, Holly, will you highlight a little bit? And my lovely wife, Holly, over here, we own Bingo Reverse Mortgage.
That's right.
She is the expert on the product. Can you explain a little bit
Yeah.
more about how that works?
Yes, of course. So the reverse for purchase, it's a fairly new tool that just came out in 2009. The reverse mortgage has been around for a long time, but the industry was finding that people were selling their old home, buying the new home, and doing a reverse mortgage right away on it. It's like, why pay closing costs twice? Let's make this one-shot deal.
Okay, so hold on, let's stop. You're selling your home, then you're buying another home, and then you do a reverse mortgage right away.
So people were doing that.
That's what they were doing.
They were doing that prior to 2009. And when they noticed people doing this, because the reverse mortgage shut off the mortgage payment, they said, let's just make a reverse or purchase the option, and you sell your house. So let's just, I use very, very even numbers. Just
Okay,
so you
beautiful,
sell a house for
beautiful.
$500,000. Instead of taking that and paying, $500,000 for your new house, you can pay $250,000 for that new house, get a reverse mortgage for the loan for the $250,000, keep $250,000 in your bank as a safety net, and move into that home without a mortgage payment.
Wow. Okay.
So, where this really comes in to play with today's homeowners, okay, is if you're over the age of 55. Okay, and there's products that range. Some are federally insured, some of them are proprietary. But if you're over the age of 55 and you have about 50% equity in your home,
Okay.
oftentimes they're stuck right now.
Right. Yep.
Interest rates, what are they, doubled? You guys know
Yes.
as well as I do.
Right.
I'm not going to beat the horse. Every podcast is telling us the same thing over and over again. We understand the reality of where we're at. People don't want to make a bad move. They
Right.
don't understand how this product works, and that's where we come into play. So being able to not only move into a different home to upsize or downsize, more often downsize, move near the children or grandchildren, or relocate or buy a summer home or something like that in nature. They think they're frozen with the interest rates right now, and they don't want to make a bad move. This opens up the opportunity to move in with a larger down payment, okay, and no ongoing monthly payment. There are some taxes you got to take care of. It's not
Sure,
like winning
sure.
the lottery, right? And you got to have an expert to walk you through your scenario. But to piggyback kind of on what she said earlier, if you had a $500,000 home, you have a client that owns their home and they think they want to move or they think they're stuck, it's important to touch base and say, hey, if interest rates weren't an issue, if home values weren't an issue right now, what would you do?
Right.
Where would you go? Would you
Right.
change the situation? Are you in the good spot right now? Because there's some value that we can serve here and explain kind of how this works. And a lot of people just don't know how it works. So
Right.
we got cash buyers all the time moving to Colorado from California, things of that nature, and they're paying cash for homes. Even if you could,
So,
why would you?
right.
Right.
Right, exactly. I mean, people need money in their retirement. And so what I'm hearing today is that there's several options. There's people that are selling a house like in California and they come to Colorado and they want to purchase something. They can do the reverse purchase. Is that what it's called?
That's correct.
Mortgage. Or there's somebody that's sitting in their house right now that needs extra cash because inflation just went up and they're thinking, I just need to do a reverse mortgage. So, and their house is free and clear, and how do they take that out? So explain how the reverse mortgage works for somebody that's just in their house.
So if they have about 50% equity or more, it depends on age. It's based on how old that you are, is how much equity you can access. The reverse mortgage pays off, or even if your house is paid off, you can get a reverse mortgage to access that home's equity. So the reverse mortgage pays off the first lien or a HELOC if you have that, and then whatever cash is available, you can do a lump sum into your bank account. You can do monthly payments to yourself. $200, $500 a month, whatever is available to you. That way you can plan your cash is king when you're retired, so you can plan that way. Or you can do a line of credit and put all of that money in there. That does grow a little bit over the interest rate, so that's a neat tool, but then it's there if you need it. Kind of just like a HELOC would be. You can put money back into it, you can take money out as needed. And so that's a really neat option because it's just available right away to people. So
Okay.
that's if you want to do a reverse mortgage on your existing home. And a lot of
Right.
people even will take out that lump sum to purchase a second home, maybe a vacation home in Breckenridge or in Florida. So that's a unique way that people are using it as well.
Okay. So let's take a scenario of a person that's, you see a lot of people that outlive their spouses and they're in their house by themselves and they lost an income or a retirement or something. And they're thinking, okay, I need more cash and I don't want to bother my kids and stuff. And so I need to do maybe a reverse mortgage or come talk to you guys about something, and they own it free and clear. And let's say they decide to get $1,000 a month in payments to them. Okay. So every month $1,000 comes to them and they can pay their bills. Do they have to make a payment on that every single month? How does that work?
Well, that's a great question there, because that $1,000 a month is on top of their mortgage payment, because there is no mortgage payment as well. So if they're trying to get $1,000 a month payment coming out, they want to take, and Holly, I'll let you talk to the specifics on this, but just keep in mind that they're also turning off their mortgage payment.
Okay, so they're getting $1,000 a month coming in.
That's right.
And they don't pay a dime. They just literally take $1,000.
That's correct.
And then interest is accumulated on top of each thousand. Every time the balance keeps going up of what's owed, but there's an interest rate on that is accumulating over the course of time.
That is correct. And it's paid back when you leave the house permanently. So if someone passes away, they sell the home to move into a long-term facility, or they sell the home to move into a different home, that's when the loan is paid. And
Okay.
that interest that has accrued is paid, and the entire balance paid. And then the remaining equity goes to heirs or goes to that person for the purchase of their new house, or it's just directly to their bank account.
Or they keep the home on this. Or sometimes we run into situations, it's not very common. The reality is sometimes we run into clients and they're like, hey, I want to leave the house with the kids. Okay, that's great.
Right.
And then you get, because it's a kitchen table conversation. This isn't one and done. This is really high touch. This is getting family, talking to financial advisors. This is a whole piece of their tax strategy. So it's very high touch. We bring in a lot of experts together and we sit at the kitchen table and we say, hey, here's the deal. If you want to leave this house to the kids, you still own the house. You're still entitled, just like a regular mortgage. It would come due. You'd have to pay the difference, and they can pay it and keep the house, or they can sell it, right? So it's one of the myths is that you don't keep the house, is what I'm trying to get to, because education is really key at this moment right now. People need to make moves, but they need to make the right moves.
So there's literally a commercial on TV, and I think it's Magnum PI or something. I don't even know what that guy is. Tom Selleck.
Tom
Yes.
Selleck,
Right?
he's spokesperson.
And he's saying, hey, come to this company for a reverse mortgage. We're not going to steal your home or whatever. Well, because a lot of people think that when you do a reverse mortgage, they pay you until you die, and then they get to keep your house.
Right. Right.
Can you talk a little bit about that?
Absolutely. I'll let Holly kind of jump in here, and that's one of her favorite ones, because there's like 4 big myths. And I
Right.
think it's a great moment to
Tell
talk
us
about
the
those.
myths.
Let's talk about
Yes.
the
Tell
myths.
us the myths.
So when you get a reverse mortgage, you can take out 50% of the equity. So there's still 50% remaining of the equity in the home. And your home is still appreciating. And we, when we meet with our clients, we show a 20-year, what does this loan look like growing? What does your equity position look like growing based on a 4% appreciation value of your home, which, Colorado's seen 16%. So 4 is a safe number that we use. And then here's the remaining equity each and every year as well. And so that chart really helps people understand like all of the components to say, there is still remaining equity for my heirs, or based on, how many years you live in the house. And so that chart's really helpful that we use a lot for our clients.
Okay.
Yeah.
One of the other big myths is obviously that you don't remain on title, or that the government, somehow it's a trick for the government to get your home.
Right.
And who knows how these different myths get started. My understanding is there were some people that got in trouble back in the 60s when this product first rolled out. They didn't pay their taxes. You got to pay your taxes.
Oh, that's right. That's
You
right.
got to maintain the home.
Yes.
Okay.
Yes.
If you don't do these things, this whole thing can come due. And those are things that you need an expert to walk you through. Now, you're paying taxes already. You're paying insurance. You're upkeeping your home already, hopefully, right? But it's the principal and interest mortgage payment that's turned off. One other thing to note is when you look at a 10-year amortization, typically, because we use such conservative numbers, and we're required to for a lot of different reasons, there's a lot of restrictions and a lot of governance over this. And I could go on for days about how the government should not be involved very often, but this is one of the moments where I actually look at the history of it, and when we jumped into this industry, I'm very proud to be a piece of it because it is very highly regulated. When you're dealing with seniors, all right, and I'm only a decade away from being a senior myself, right? But when you're dealing with seniors, there's a lot of laws out there to protect them. They have to go through HUD counseling. All right, so the first step is, let's say, for example, you guys had somebody reach out to you and said, hey, I'd really like to move up to Fort Collins to be near the grandkids, but I'm froze, I can't move, I'm thinking about renting it, what's our options, what's this? If they wanted to have a conversation with us, maybe they know about the product, maybe they haven't. Oftentimes they haven't. There's just a real lack of education around it. Everybody knows Tom Selleck, but they don't even know what company.
Yeah,
does that make sense?
Right. No, I don't.
That's
we just look at Tom Selleck.
That's a real problem.
Exactly.
Yeah, I have a personal problem with that. I think that this industry is so incredibly underserved, and it's been disrespected. It's been a cattle call. At one point, some of the big players with the mustache and the Ferrari, they were getting 10,000 leads a month, and it was just serving the low-hanging fruit. And there's a lot of people out there that need this in order to reposition debt, okay, or they're using it. They've got a $1.5 million home, but it's extremely outdated.
Oh, okay. Let's talk about a few of these things. Okay.
Let's talk about this.
One of the things you said was they have to keep up their home. What does that mean? You mean that everybody just naturally needs to keep up their home, or is there you said something could be called due?
Yes.
And for me as a realtor, I'm like, ding. That's
ding.
Like,
Yes.
So you guys, the mortgage company goes and looks to see if there's something going on with the house that they might want to cancel the mortgage, cancel the payments.
So when you get a reverse mortgage, you get an appraisal done, and it's an FHA appraisal. So the home needs to be in the FHA standards of appraisal. So they don't come and check your home necessarily, but you need to keep plumbing working. You need to keep leaks from happening on your roof, like very, very basic maintenance things. And then Brian mentioned the property tax. Taxes always have to be paid.
But when you say you have to, who determines what that standard is?
The FHA. FHA and HUD come together. And to get specific on that, maybe
But do they come and do inspections?
Not beyond the first appraisal.
Okay. So
If you went to
That is
refinance,
correct.
no, let me correct. If you went to go refinance, because people refinance it, right? Interest rates affect reverse as well, even though there's not a payment. And that's what really spooks people about interest rates, let's be honest.
Yeah.
The variable interest rate, their payment going up and down. When there's no payment, that kind of compartmentalizes that one risk factor, okay? And the reason that I bring that up is if you look, and maybe you can explain a little bit more what I'm trying to say here because you understand the background of it. Go ahead.
FHA. You're talking about FHA.
Yeah, because
so when the FHA appraiser goes in, he looks for the standard FHA standards, passes it through that standard, but then it's not like an ongoing inspection to make sure you're keeping up on the house. But so that brings me to another question. How long do these payments, is there a certain amount of term that these payments go for? Is it just till the equity runs out, or based on that appraisal, or is it like a 15-year term, or something
no
like
terms whatsoever. They actually do use until you're 150 years old, then the loan becomes due. So if you live to be 150, then it would become due.
So if you got clients out there taking ice baths and they're on testosterone, you might want to tell them pump the brakes a little bit.
Yeah.
So, but the point there is they put it so far out because, even if, let's say you got a reverse mortgage and you lived for 40 years past that, there is a possibility that you would, the equity would be taken up, but it's a non-recourse loan. So what that means is whenever you sell that home, the value of that home is what the lender is paid.
Okay. If this is, I'm understanding things correctly. This is a beautiful product, and what I'm hearing is they do an FHA appraisal. Let's say it's $500,000, right? And you own your house free and clear. Every year, the amount of 500 goes up 4%, 4%, 4%, right?
Yes.
And they're taking out, let's say, 1,000 a month, 1,000 a month, 1,000 a month. So by the time they're 20 years down the road, they're still getting their 1,000 a month. Their house is really valued according to the mortgage company that compounded 4%. It could be like we're 800,000. So they're still collecting money for a long time.
Yes.
Right.
Yes.
And luckily, the Bible says that we can't live past 125 years old. So it'll never.
Bingo.
Yes, exactly.
Yeah, that's right. Bingo. Bingo.
Yeah.
Exactly. So
I don't want to live past like 73. I don't know about you.
Yeah.
It doesn't look so great.
that is an amazing
Yeah.
product.
Yes.
I mean, that's amazing.
yeah.
But people like us, we're novices on this. And
It's not
hearing-
perfect.
Okay. Is there any faults? Is there
Yes.
something we should be looking for?
Yes. A lot of this, and Holly, feel free to chime in if I get rambling here. She's the expert again.
Okay.
A lot of it's based on your age. So yes, you can qualify at 55, but what you're going to be able to access all depends on how old you are as well. So somebody who's 65 years old is going to be able to pull out tremendously more money than somebody who's 55. All right.
Why? Oh, that's why. Why would that be?
Well, they're basing it off the risk of how old you are. That's
Okay.
essentially what they're doing. So if you're 55 and you shut off your mortgage payment and you live to be 80 or 78 or however, 73, let's say.
Okay.
Right? That's their exposure for no payment. And they're basing it on the fact that they're going to recoup the value of the home over that however many years, couple of decades, right? If you're older, there's less risk. They know you're not going to live to be 125.
Right.
And so there's less risk if you're 72. You could pull out a tremendous amount of money at 72, shut it off, and sit there. So there's a lot of different situations where it's smart to use this, and it's all about cash flow. Once you're above 55, it's all about cash flow. It's all about, ultimately, it really comes down to taxes, oftentimes, and how you reposition debt and how you pay your taxes. Let me give you another example. Somebody might own their home, and they've got an IRA. And they want to transfer things over into a Roth IRA, right? Tax deferred. Got to pay the tax man. Where are you going to pull out that $200,000,
Right.
right? Why don't you pull it out interest free?
You mean tax?
Tax free, excuse me.
That's why I'm here.
Have you left my compliance officer over here? Yes.
There is interest.
Yes.
but
Tax free. Thank
Okay.
you. And talk a little bit about that because that's another one on the myths. That's one of the third
Well,
myths.
the interest part of it, you brought up another question for me, is okay, if it's growing at, let's say, 500 grand, if it's growing at 4% inflation, you're right, what is the interest rate on the loan growing?
Did you say 4% inflation?
Yeah, I thought that's what Holly
Oh,
said.
yes, yes.
4% in
Appreciation.
Yeah.
Yeah, why did I
Yeah.
say inflation?
That's right.
Appreciation, almost the same thing.
Yes.
Anyway, but what is the interest rates? Are they similar to a normal mortgage rate, when we're paying back a 30-year loan, or are they a little bit higher?
So the interesting thing with reverse mortgages is, most reverse mortgages are adjustable rates, and so they're capped out.
Oh.
And so the where that starts is kind of based on where the market is. It's based on the CMT index. Not to get too specific
But
here,
no fixed rates.
But there is a fixed rate option.
Okay.
Yes. So there you can go both ways. And we talk to our clients and what's your specific need? How long are you planning to live in the home? Because depending if they want to sell in 3 years, that's going to be a different conversation than this is my home for life. So there's a lot of factors to be considered on an individual basis. But the majority, if you want the line of credit option where you can have the money sitting there, you're not paying interest on it unless you take money out of there and you can put it back in, that will be an adjustable rate mortgage. So
Okay, gotcha. Yeah, the right line of credits.
And
are
so-
usually,
yes, exactly.
And so it grows
Yes.
at the same rate
that's right.
as wealth, which is important. And so when you look at that 10-year average, in Colorado, we're just very blessed in
Yes.
very many ways. I don't have to tell you guys that, but
Right.
even in 2008, during the market crash, we talk about market home values in 08 in Boulder County, they just leveled off.
Yeah.
They didn't dive. We're just blessed here. We're
That's
in a unique
right.
situation. So over a 10-year amortization, it's a break-even point typically,
yeah.
which is amazing when you think about what you could do with $250,000 pulled out in a line of credit. Oh, by the way, you're also shutting off your $4,500 mortgage payment.
One thing too, you mentioned 08, and so You know, when you had a HELOC on your home in 2008, they
Here's the
shut those off.
Here's the fourth myth
Okay.
for your thumbnail, right?
Okay.
The line of credit with a reverse mortgage can never be shut off. That is yours, no matter what happens to your home value. If there's a major recession or whatever, a market correction, that stays. They can never turn that off. Like a HELOC, they can.
So in 2008, and a lot of people don't talk about this, a lot of people pulled out a HELOC.
Mm-hmm.
And obviously we all know what happened, right?
Yep.
And they have that as a last resort. Those can be revoked at any moment, and they were.
They absolutely.
Yes.
This piece of that component being non-recourse, and I believe it's some of the either HUD or FHA guidelines. If I say both, I'm usually pretty covered, right?
Right.
It can never be revoked.
Right.
Never. So that's powerful. You talk about insurance. You want to talk about being stable.
Mm-hmm.
You want to talk about if you want to make a move on another property, things of that nature. Now, another one of the requirements, and I want to mention this, and I don't want to get too much into detail. You got to live in the home. It's got to be your primary residence, 51% of the year.
Oh, absolutely.
Right. So that home in Florida, right, 49% of the year you can spend there.
Yeah.
Right.
I remember 2008 well. I have some rental properties, and I pulled out a line of credits on each one of them. I had a zero balance, but I just had them in case I wanted to do more investing.
Yeah.
As soon as 2008 happened, they canceled every single one of them, so I couldn't pull anything out because they were
Yes.
scared.
Yes,
Because
you know.
I could have taken it all out and cruised off to the Bahamas, right?
Yep.
And so they canceled. What
Yeah,
you're saying
yeah.
is this line of credit cannot be canceled.
That is correct.
This is one of the reasons we got involved with this industry.
Beautiful.
Because once you do a deep dive, and I don't want to get too spiritual, but it's kind of like our faith.
Yep.
Once you do a real deep dive, you're like, oh, like I know stuff now.
Yeah,
you know what I
right,
mean?
sure.
Now there's responsibility here. This is a product that we talk to financial advisors all the time. As I said, they're using this as a tax tool or to reposition debt, all sorts of different options, right? But one of the biggest things that stuck out to us, because we're relatively new in this space, we're not your typical mortgage company. There's about 6 of us. We've got an agent down here in Parker. We're up or agent down here in Springs. We're up out of Parker, and we got somebody up north. And this space is completely underserved. And obviously, we do things that don't have to do with reverse for purchase, and that's a larger piece of our business. But in this market right now, what we discovered is agents that are. How many agents do you have here?
22.
You run a brokerage like I do. Mine's much smaller, small 6-man team here. But we know who can take an opportunity like this and go in and create value. And I don't mean any disrespect by this, but not coming from this industry, she grew up around the kitchen table with her father doing mortgage and real estate, and
Okay,
he did some
cool.
different stuff
Yeah.
up there. I was doing all sorts of different stuff, and I just know I like connecting with people and adding value, and I don't want to sell copiers and ridiculous things that don't make a difference in people's lives, you know what I mean? So what I wanted to do was make a difference, and the more I heard about this, and the more I talked to financial advisors, they all have the same look of, this is a no-brainer. It's a no-brainer. So on your end over here, we're trying to deliver value. Some agents are going to get this message out in front of people and touch base and say, hey, you know, how you doing in this house? How are things set? Are you guys comfortable? The market's up, the market's down, and, you know, are you froze? Are you feeling stuck? I don't know if you know, but here's something that we're aware of, and I want to be able to add some value. Because I said the respect piece earlier, Gunny, right? You guys kind of have a reputation in this industry of kind of one-night stands, right?
Yep.
Here's your shot to go in and call them and bring something to the table. Because you start doing that type of thing, you've been doing this a long time. This is how we build our company. You start adding value to the clients, and they tell everybody.
Sure.
They tell everybody.
That's right.
So, because there's a lot of people that want to move around. Some of them out of state. You'd be surprised how many people are just shuffling around the Front Range.
All the time.
You probably know better than we do.
Right.
Well, and to paint a picture, just last week, Donna, our client, we did a reverse for purchase with her, and she lived in a condo. It was on the 2nd floor, so the stairs were getting to be, really hard for her. Her neighbors were really noisy. It wasn't in the area of town she wanted, and so she sold that property, and we were able to get her a nice townhome in Littleton, no stairs.
Right. Yeah.
And she walked away keeping a little bit of money even, and so it just is a really cool tool for someone who maybe they're not in their ideal situation and they want to change. And so this tool really helped Donna. And I mean, our loan officer, April, she talked to Donna every single day for about 2 months, from when she sold her home to when she found the new one. And Donna went through 3 realtors. And so we educated those realtors, because we're noticing that people are not familiar with how this works exactly.
No,
You got so much going on. I get it.
Yes,
as
yes.
realtors, we know how to sell properties. We know how to buy properties. Back in 2000, when I first got in 2001, I had to know mortgages because there were no mortgage people licensed with the state. Anybody could have, open their trunk and give somebody a mortgage.
Yeah.
And so I had to really, really learn everything.
Yeah.
When
yeah.
everything crashed and they made all the mortgage people become licensed, I was like, thank you,
Yes.
Lord. You're the professional now.
Yes.
Now I know nothing, right? I know how to
Yes,
sell.
Yes, yeah.
Yeah.
And I
Yes.
focus on selling. I don't have a big mortgage file over here that I'm making sure everything's done right. So I love that aspect, but we have to educate ourselves
Yes.
because sometimes our clients are saying, what are interest rates? And I'm like, oh, I don't know. They change 3 times a day. I have no idea
Right.
what they are today. And so that's good. Let me ask you, I have a couple questions from what you just said. I guess for tax-wise, you were saying that they can do tax strategies out of this. I would imagine that every time there's, you're getting a payment, and every year you're getting a 1098 probably of the interest that accrued. You didn't really pay the interest, but it accrued. I mean, you know anything about that?
I know enough that you need to take it to your tax guy.
Well, because I mean, that's
Yeah.
a tax strategy. I mean,
So
Yeah.
the thing I'll say there is, because this is a loan, it's tax free. So you're not.
it's tax-free, but like, okay, on a normal mortgage, where you're paying $1,000 a month, and let's say $500 of that each month goes towards interest. At the end of the year, the mortgage company says, hey, you spent, $6,000 in interest. I get to submit that to the IRS and say, look, I spent $6,000 in interest. I don't want to have to. So I don't know if, tax-wise, I guess we would have to talk to the CPA. You probably don't write that off because you haven't started paying the interest yet. Maybe down the road you get one gigantic interest. If let's say you sell the house down the road,
Yes.
or your kids sell the house, and there was $40,000 in interest that accrued, right? You'd get like a 1098 for $40,000 that you just paid.
And that's not how it works. Being taxed, because it's not, I know that that's not the scenario. My gut is because where they do get you, and this is a space where I'm really going to get into trouble for doing that.
Yeah.
But my hunch is whatever you do with that, with those resources. If you go take that out and put that in the stock market now, that's where they hit you with the taxes there. Because this is
take
not,
it out.
the tax exposure on this product is very lean. And to answer that specifically, I'd need to do some research.
Right. This is interest that
Right.
you pay.
Right.
That you're obligated to pay. That's deductible.
Yeah.
The question is it deductible each year or deductible in the
At
end?
the end.
Because that is a very interesting
Yes.
question.
Yes,
Now,
yes.
a CPA would answer that, and it could change at any time. But
Yeah.
when you said tax strategies, I was thinking, oh man, how would that work?
Let me follow up on that.
Yeah,
That's very good. Yeah.
get that.
There's a lot of benefit. You bring a lot of value. I know you know this because of your mortgage background to this space. Having that foundation, what we've realized is as soon as we start talking to agents and educating them just a little bit, I mean, you guys, we're all on the same team, right?
That's right, yeah.
Right. I mean, if you got a client that owns their home or even doesn't own their home completely, right, but wants to do a reverse of purchase, I don't even want to talk about the fact that they qualify for about 20% more purchasing power.
Yeah.
Right, that's a pretty big word, purchasing
Yeah,
power. I know
that's
with you
right, that's
guys,
right.
right? Yeah.
Hey,
Yes.
But what do you guys make on transactions on that and then buying another home? On our end here, one of the things I love about it with you guys is the value. Like it's whenever you look, and it's human nature. Whenever you look at two people or two companies or any relationship, right? There's always a value balance, and the fact that we do very well on our end, and we're able to take care of our family and create the kind of lifestyle that we want and continue to add value and build relationships. You guys far benefit more. And so that's a space I like to work in.
Yeah,
Does
well,
that make sense?
We have to have lenders or
Yeah.
we don't sell homes.
Right.
I
Right.
mean, yes, we have cash buyers, but not like the
Yeah.
amount of people that take out loans, right?
Right.
So the one that has the purse calls the shots,
Right.
right?
It's the ones sitting at home that are log jammed,
Mhm.
and they're like, babe, we're not making a move. We were going to move, but time isn't right. You know, it either moves some people's retirement up or it moves some people's retirement back, right? And what we're noticing with agents that really care about their clients, okay, and you know, and they really want to look what's best for them, they're reaching out to them. They're saying, hey, if that wasn't an issue, if the interest rate wasn't an issue, and home value wasn't an issue, right, and your 401k wasn't an issue,
Right.
cash flow wasn't an issue.
How about credit? Does somebody have to have good credit to get a reverse mortgage? Because I mean, this would be
Yes. So the nice thing with reverse mortgage is we're dealing with retirees. So the qualifications are a lot less than if you're doing a traditional
looser.
mortgage. They're a little So
Significantly.
generally, what we're seeing is people are qualifying with just their Social Security income, maybe a little pension,
Right.
maybe a 401k that can get added in. But a lot of our clients qualify with just their
'Cause
Social
there's
Security
equity.
income.
And
the
no
equity,
payments.
That is correct.
Bingo.
Yeah, and we do pull credit reports. And you know, if there is someone that has struggled, who's had, delayed mortgage payments, or just, we can, depending on the situation, maybe it's a medical issue, and we can explain that. That's why we had these, late payments or things. But there's also something called a LISA, a life expectancy set aside, and they take a portion of the equity for someone who the credit doesn't quite pass, and they put a portion of the equity aside, and they pay the taxes and insurance out of the LISA every single year, kind of like an escrow. Because you don't typically have that on a reverse mortgage, but if someone needs that just because of their history, their credit, that is available, which is nice. So then they don't have to,
But
remember
because
to
there's
pay
no
that.
payment
Yeah.
due, right, and you're not going to pack up the house and take it to the Bahamas. You
Right.
know, it's sitting right there.
yeah.
There's very little exposure on their end, so it's really relaxed, and it is designed to help people.
And the
You know,
reverse mortgage is in first position.
Yes.
Always.
Always.
Always. And there's
Always.
there's
That's
no
right.
second. You can't go get a HELOC if you have a reverse mortgage.
That's
Things of
right.
That nature, like it's just the reverse mortgage
Right.
on that home. Yep.
Okay.
You can switch back and forth. There's a lot of different little nuances, and that's where the kitchen table conversation really comes into play. And one other thing I just wanted to share briefly, just our experience with realtors. This is high touch beyond what you guys have experienced before, unless you've done one of these. And even though you guys are primary in the seat always, don't be surprised if we take the lead in formation oftentimes, because this is something where we're just as close, if not closer, to the client. We do all our processing ourselves. It's one of our gifts. We're a boutique company. We know how to connect and make sure that they understand not only what's going on, all their options, but what the next steps are and how do we continue to move it across the playing field. Because from the time that it takes for them to think about the sales cycle here on your end, you touch base with a client or one of your agents touch base with a client. Yeah, I never thought about that. Okay, I want to know some more. We have an assessment, a conversation, a brief convo on the phone. Hey, here's who we are. Here's what we do. Let me answer some questions. Let me ask you some questions to see if this is even a fit. Then we get some detail, pull some numbers for them, and you guys can have access to this information as long as they're fine with it as well, and I'm sure that they would be, right? And then we sit down at the table. We sign an application. At that point, it locks in what is really the most important piece in my opinion, okay, and this is strictly my opinion. It locks in their primary lending limit. Am I saying that correctly?
The principal limit.
Principal
which
lending
Is
is
limit.
fancy term for the loan amount.
Yes, sure.
The interest rate is important. It's always important, but it's not the primary focus on this product. The primary focus on this product is how much can you access and how quickly can you shut off the payments that you're already making. It's like anyway money. If you're spending $3,000 a month in mortgage payments over the next 12 months, how much are you going to spend? I got to ask a Marine some math. How much?
36.
Yeah, you're spending that money. Yeah, good job. It's a good answer. But you're spending that money, with or without us. And so that's the part that when you really start to explain to people, like, okay, I get it. Now let's talk about where you want to move. Because we're a mortgage company. We've got a variety of lenders. We have done forwards, but we specialize in this. We niche down into this because it's so underserved. So when you talk to them, you say, okay, where would you go? You start opening that conversation. It might be 6, 8, 9 months. I know you guys have longer sales cycles, but once we're involved, if somebody knows what they're doing, and they can put together a sale on this house, and they've got another house they want to make a move on, how long can that turn time be? How quick have you seen us move?
Well, the client I was telling you about, I think her total process was 3.5 months.
Yeah.
From
Okay.
selling her home in this market and finding her new home and,
Okay.
But the process for us, as far as what we did, we're about 6 to 8 weeks.
Yes.
I'd rather think 8 weeks.
when Donna found her home that she wanted to purchase, we got it done in 4 weeks.
Okay.
So
So,
I have another question.
yes.
Let's say you're 75 years old, you need some money, and I'm just going to give an analogy, or not an analogy, just a scenario. You're having trouble paying your bills, okay? And so your credit's taking kind of a little hit because you're having trouble paying your bills, and they come to us and go, "What are we supposed to do?" And you know, obviously it's credit driven, but it's very loose, right? So maybe there'll be some grace there if they have tons of equity, and maybe the amount of the mortgage might be less because of the hit of credit or something. Is that
Right.
fair to say?
Yep. This is a typical scenario we see.
Okay, so they take out the reverse mortgage, not the home, not the purchase, reverse purchase, but
Right.
Yep.
to help them, and then 5 years later, they're really having problems, and they decide, I'm going to go to a retirement center, and our kids are going to help us find a nice retirement center, and they go to that. Does that house have to be sold now to pay off the reverse mortgage, or can they still? I guess they can't rent it out and collect that for the
No.
retirement center.
Right. No, they would either need to sell it and pay off the mortgage balance, just like if it was a forward mortgage.
Okay.
Okay. Or they could pay off the difference and maintain ownership.
Refinance it,
Yeah.
maybe.
Yes.
Just like a forward
Okay.
mortgage. Yeah.
Okay.
There's one I missed there. One of the better questions there is, how do they access that equity to pay for the long-term care?
Right.
That's the better question.
Right. That's right.
Yeah.
And I guess the reverse mortgage wouldn't come into play on that.
No.
Okay.
No, other than allowing you to access it to pay for it, so it's taken care of ahead of time, right?
But along those same lines.
Does that make sense?
No.
Oh,
Go
go
ahead.
ahead.
Like if they took out 200,000, they could-
Right.
But the reverse mortgage has to, if they move, that has to be paid off, isn't that
Right. I'm talking about more like long-term care, not in checking into it. Like if they had in-home long-term care or something like that. That's what
Oh,
I'm
if they
talking
had
about. I
that. Okay,
apologize. Let me
yes, they could do
clarify.
that because that's still their
Yes.
primary
That's
residence.
exactly right.
Okay,
Which is
yes.
becoming more and more popular.
Absolutely.
People are
it
living
is.
longer. I mean,
They
we're
want to
making.
stay in their home.
I got to make it to 125.
That's right.
I got to make some calls then, guys. I got to get a phone.
And I was just going to comment that we see people utilize this tool where if there's a husband and wife and one needs to go to to a facility, the other spouse doesn't and want to stay in their home. Well, the reverse mortgage really protects. Like my grandma and my grandpa had passed and she remarried, and her husband had Alzheimer's. He had to go into memory care. They had done a reverse mortgage, so my grandma was able to stay in her house because, she didn't have a mortgage payment, so she could stay and go visit my, grandpa. And that was a neat tool that they used as well. And we find a couple, or if someone gets we work with the Parkinson's Association, and someone gets a diagnosis, that spouse is like, how I want to make sure everything's taken care of for my wife or my husband. And a reverse mortgage really gives them peace of mind because they know that they'll stay in that house for as long as they live or as long as they want to, and without a mortgage payment, which is a huge deal. And so that's another area where this tool is really valuable. And so that's one of the reasons why we do this. It
Sure.
just really does help people in all different kinds of situations.
Less than 4% of all reverse mortgages are reverse for purchase. Less than 4%. And when you think about the trillions of equity that seniors have, it's a good space to be in.
Yeah,
Not to mention
nice.
the fact that nobody can say who Tom Selleck works for.
That's right.
There's a branding issue that I'd love to address.
Bingo.
It's like bingo.
Exactly.
Yeah.
So, anything else about reverse mortgages you want to share before I tell everybody how to get a hold of you?
The last thing I'd share, and then I want to end with you because I know you've always got something great to end at the end. If I know that there's a variety of audience that's going to listen to this. If you're an agent out there, you need to go and search your database, and you need to filter it by age, all right, and punch in, 1968, right, 10 years younger than me, and export that into your bingo list. Because all those people sitting right there, chances are they have no idea how this product works. And you might give them a call, and maybe they're all set, and maybe they're not open to it or whatnot. But we all know the people that are going to make it through this cycle, right? And the people that aren't going to make it through, and it's the people that are going to do extraordinary things. My invitation is to go add value, because you'd be surprised how many people are looking to make changes. They just don't even know it's an option. Upsize, downsize, single level. They want to be near the grandkids. They want a vacation home. They want to do all these things.
Right.
So, not to mention the tax benefits and all that. So,
Right.
Yeah.
what would you say?
Yeah, just it's been great to be here. Thank you so much for having us. And I think that's something in this market, it's a professionals market that, if the past couple of years, people have kind of, I'll make some money in real estate. I'll do it part-time. I'll do some mortgages. And it's been a market where you could do that and do it part-time. Now it's a professionals market. And so that's why we're here today, is to educate our realtor partners and introduce them to this whole product, because it is something that they could add value to their clients. It's something that they could learn more about.
Right.
And, just to increase awareness. And it's a newer product. It came out in 2009, and 4% of all reverses. So it shows Brian and I that there really is a lack for realtors, for financial planners, for divorce attorneys. This is a great tool. If you're getting a silver divorce or a gray divorce, one person can take out a reverse mortgage, stay in their house, pay out the other partner.
Wow.
So that's, there's a lot of ways to use it. So even if I know that you guys might run into, we have to sell their house because we're going through a divorce. Well, not always. So one of them might need to buy a new house, but that doesn't mean you have to sell your current
It just depends
house.
on what the attorneys say.
Yes, exactly. There's a lot.
There's estates that we have to sell and divorces that we have to sell. So, but I totally see value in this for a lot of different people, because we come into play down the road. We want them to be able to stay in their house.
Yeah.
We know that it's an estate down the road that we might be able to sell.
Yeah.
And it could be, like I said, you're 75 years old. 5 years down the road, you might go to a retirement center. The family needs to sell the house. That's where they're picking us up to help them. So go ahead.
Last two things I wanted to add in, if I may. And I want to, first of all, thank you guys again for making some
problem.
time for us coming down here. Just a door knock, come in and see how you guys are doing. But we really do believe we can make a difference. The last two things I'll leave, and we'll make it short here. I think right now, it's so critical that you have a relevant market opinion, and that you have conviction, whatever it is. And if you don't know, tell them you don't know. But if you have an opinion, right now people are looking for experts to help give them advice.
That's exactly right.
And when you can call and come from that space of serving, of honoring them, of, hey, how you doing? What's going on? Let me make sure you're aware of this. Anything changes, you need me. What do you got going on? You got anything else? You guys good? You need anything? Okay, great. When you come from that space, it's been absolutely amazing. And I don't know if it's because of some of the halo that's around agents, all right, of, kind of coming in a one-night stand type of thing. But when you come in and you reframe it that way, it's amazing, the response that some of our agents have got. And the last thing that I'll say is the difference between the ones that are going to make it and the ones that aren't is going to be how are you keeping in touch? How are you getting messages in front of them? How are you adding value? And getting this message in front of them is, you guys can see it's a no-brainer.
Yeah. So tell us how people can contact you and if they want more information.
Our website's bingoreversemortgage.com.
Okay. Cool.
And then my email is holly@bingorm.com.
Okay.
We don't want people to spell out bingo reverse mortgage in our email. So
Exactly.
bingo R for reverse, M for mortgage.com. And then by phone, my direct line, which I would love to give out, is 303-564-8604.
Excellent.
Yes.
And as usual, we're typically second in the pecking order. If you're hearing this, and I don't know what different audiences you have, but if you're hearing this, reach out to your agent first and talk to him, ask this question. And chances are, over the next the course of time, we hope to come down here again and continue to educate, and we'll be here if you need us.
Beautiful.
Yes.
Thank you.
Well, thank you, Brian and Holly, for being with us. Guys,
Yes, thank you.
call them if you need a reverse mortgage or wanted to even know a little bit more, or sit down at the kitchen table and discuss, what can I do? What can I do? There's no obligation. You just need to figure out what can you do, and it might be the best thing for you, but you'll never know until you talk to someone. So thank you for joining the Reinmuth Team podcast. See you on the next side.